Give you a quick background on ATBS for any of those of you who may not have heard of us before. We are the nation's largest business services company focused specifically on independent contractors in the trucking industry. What that means is we are a tax, accounting, bookkeeping company, business consulting company who is all built entirely around helping independent contractors make their business more successful. A number of you at CFI Contractors are active clients of ATBS, and we really appreciate your business. And what I've been invited to speak about today is the ramifications of the legislation that was passed at the end of 2017, the Tax Cuts and Jobs Act, as there are a number of significant changes in that legislation that will affect the trucking industry. As we get into this, I'm going to run through a lot of numbers, a lot of content, and at a high level, there's a lot of meat that's in here. There's over 1,100 pages of just the legislation itself that we have poured into and translated what that means to truckers and the trucking industry. So if you need more information, to get more information, I want to throw out a couple resources for you all to be able to have. You can call in anytime, talk to our staff here at ATBS. Our phone number here is 888-640-4829. That's 888-640-4TAX, T-A-X. We also have an e-book out on our website that we put together that gets into pretty specific details and tables about how this legislation will affect average company drivers, average independent contractors in the trucking industry. You can get that at our website by going to atbs.com, and you'll see right at the top of the page a link to be able to access the ebook. Another resource I want to mention on our website that's a great resource for independent contractors is called the Knowledge Hub. And at the top of our website, you'll just see a link there. Click that. And we are constantly publishing tons and tons of content geared specifically towards truck drivers, independent business owners in the trucking industry, and maintaining that out in the Knowledge Hub. And so you can go out there, get information. Like Brett, you were talking about winter driving. We've got a lot of great content out there specifically about how to take care of your truck in the winter, how to be safe in the wintertime, things like that, as well as obviously managing your business, living away from home, things like that. And then another resource is a partnership in a social media community we manage with Freightliner Trucks called Team Run Smart. And this also, it's teamrunsmart.com. We have some drivers that we give, independent contractors that we give trucks to who are out managing their business. And it's an online community with a lot of content, a lot of forums, just a ton of great information for people about managing their business, and a lot we've put out there on the tax reform as well. So to jump into the tax reform, as I mentioned, there's over 1,100 pages of code that was put out there. Kind of the big high points that I'm going to hit on today, these are kind of the biggest areas that are going to affect independent contractors and truck drivers in the trucking industry. But one of the key things is that looking into the legislation, we believe it could mean an annual tax savings of about $2,000 for the average owner-operator in the trucking industry. And this is through a new mechanism called the QBI, or Qualified Business Income. And we're going to talk more about that in just a second. The second thing is you've probably heard a lot of rumors about per diem possibly going away. And we'll talk more about why that's going to happen and what effect that's going to have on just a segment of the industry, because it really affects only company drivers, not independent contractors. And that's related to the standard deduction. So we'll talk more about that today as well. And then one of the real big things, which is really important for truck fleets, independent contractor truck drivers, and really the whole trucking industry as a whole, is what's called bonus depreciation. And so we'll jump into that and talk more about how that's going to affect everybody's business as well. So first of all, you hear a lot of news in the media about how the tax reform was geared towards just huge corporations and the extreme wealthy. The reason people like to say that is because what it did was drop the corporate tax rate down to 21% from what was an extremely high rate, one of the highest rates in the industrialized world. So now we're at a very competitive rate for corporate taxes, but what people don't talk nearly as much about is this qualified business income deduction that was included along with the legislation, and what a huge benefit that is for small businesses, including independent contractors, sole proprietors, S-corps, LLCs, the types of businesses that you all are running each and every day. So what the qualified business income is it's a new 20% deduction that's added specifically for small businesses. Small businesses includes partnerships, S corporations, LLCs, but it also includes sole proprietorships, which most of our clients, most independent contractors are sole proprietorships. And so it doesn't mean you have to rush out and incorporate your company as an LLC or anything like that to be able to take care of it. Even if you remain as a sole proprietor, this business income is going to become a new deduction for you. And it's a major deduction. It's 20% of your business income that you're able to deduct. So to give you an idea of how that works, our average trucking client nets about $60,000 a year, a little over $60,000 a year. So if we take just that number of $60,000 a year, that would now be considered qualified business income. 20% of that is a deduction that you can take. So that means it knocks your taxable income from $60,000 down to $48,000. So that's a pretty huge deduction that was added right away just to help small businesses be able to grow. The next thing that was added to really help and aid small businesses is what's called bonus depreciation. And so you all hear about depreciation and Section 179 expensing. What happened is in the legislation, depreciation was kicked in so that you're actually required now to depreciate 100% of purchases in the first year. And that's going to last through the year 2022, and then it starts scaling back about 20% a year from that point through the year 2026. This is really going to spawn a lot of economic growth, and a good example of this is the Wall Street Journal just had an article yesterday about how truck orders were the highest in January for new trucks from fleets than they've been in 12 years, and they were nearly double what they were in January of last year. So this is a pretty significant opportunity to be able to purchase equipment, depreciate 100% of it. Now, we used to not recommend this as an option for our clients. We wanted them to balance depreciation as a business expense along with how long they were going to keep the truck. The reason it's a major benefit now is because what's called like-kind exchanges have actually been done away with in the new legislation. But what has happened is net operating loss carry-forwards are now included. So what that means is if you go out and let's say that business we were talking about that had $60,000 worth of income after the qualified business deduction now has $48,000 of taxable income, and you went out and you bought a new $100,000 truck. What you would be required to do is depreciate 100% of that truck in the first year. And so you would actually show a loss in your business of that $48,000 minus the $100,000. So you'd show a $52,000 loss in your business. So you actually wouldn't have any tax this year. In past years, you wouldn't be able to carry forward that whole loss, and there were a lot of regulations around how it could be applied. Now you can carry forward and apply 100% of that loss. So what that means is with the like-kind exchange going away, it's a pretty major benefit to be able to take 100% depreciation in the first year and carry those losses forward for your business. The next thing to talk about is the standard deduction, and because this is where per diem gets hit, what's going to happen is the standard deduction was basically doubled for all types of tax filers. To give you an idea, someone who is filing as just a single taxpayer under the previous law had a standard deduction of $6,350. Under the new law, that goes up to $12,000. Now, per diem was a deduction, and so what it is basically saying you as somebody who is traveling away from home, you're going to be allowed to be reimbursed additional expenses that you're going to incur while you're away from home. With the standard deduction going up, per diem now will fall underneath that standard deduction amount for most all tax filers. And so almost all tax filers will cease filing an itemized deduction. And so that means that the typical filer is not going to file for per diem. However, per diem continues to still be a necessary and ordinary business expense. So if you're an employee, most company drivers are not going to file for that per diem itemized deduction anymore because it's going to be lower than what the standard deduction is. However, as a business owner, you're going to be able to take that full standard deduction plus as ordinary business, an ordinary expense of your business, you'll be able to continue to take per diem as an expense in your business. So you'll get the benefit of both per diem and the increased standard deduction. The next thing we'll talk about is just kind of the takeaways from that section. So with bonus depreciation, that's going to be a major incentive for all businesses to invest in new equipment. We're going to increase the standard deduction that's going to benefit anyone that does not itemize. And going forward, a large percentage of company drivers and owner-operators who have itemized in the past will instead take the standard deduction. However, remember, as an owner-operator, you're going to continue to get the per diem benefit as well as an ordinary business expense. The other thing to recognize is there's a lot of changes in other deductions, other credits. One of the big things that has been a question out there that really affects a lot of independent contractors is the Affordable Care Act penalty. You know, these range anywhere, if you're assessed with a penalty, from $600 to $2,000 oftentimes, and that is not going away yet. That does not go away until January 1st of 2019. You will still have to provide to your tax preparer, who will have to provide documentation to the IRS of proof that you have health coverage through the end of this year, through the end of 2018. The tax brackets, as we look at those, the pretty significant changes in the tax brackets where the rates were decreased for almost all taxpayers. But what that really means is you get down to it. If you go out, download our ebook, you'll see in there a table that gives a pretty good explanation of different types of business setups. We did an analysis of taking an average company driver in 2017 versus 2018, did the same thing for a sole proprietor, and then did the same thing for someone who is set up as an S corporation. To give you the bottom line, so I'm not burying you in too many numbers, go get the ebook so you can see what the numbers are. But to give you an idea, a company driver, we think, might, because of the loss of that per diem, and it's not going to be fully offset with the increase in standard deduction, company drivers could lose on average, we think, somewhere around $600, where they might experience a slight tax increase. Somebody who is a sole proprietor, our average sole proprietor client, again, makes that $60,000. They're going to see their taxes go down on average because of that qualified business income. About $1,500, $1,540 is what we're expecting for those clients. Now, if you're set up as an S corporation where you're paying yourself a reasonable salary out of the business, managing it like a true business entity, we're going to see those taxpayers tax bill go down. It's only going to be about $680 we're going to see them benefit. But to give you an idea, so a company driver who makes about $47,500 a year on average is going to have take-home cash after taxes somewhere in the neighborhood of $41,500. An owner-operator who's operating as a sole proprietor under the new tax law that's making about $60,000 a year, but he's a sole proprietor, so everything is pass-through income. They're going to see their taxes go down the most, but they're still going to have take-home cash left after taxes of about $49,000 a year. If you are set up as an S corporation where you're paying yourself a salary, doing all the things that you can really do to manage your independent contractor business as a true business entity, they're going to see the best benefit. and they're going to get their taxes where they're going to have take-home cash flow left at the end of the year after that $60,000 average income. They're going to have nearly $52,000 that they get to keep at the end of the year. And this is before state income taxes, and these are all very broad generalizations because everybody, depending on mortgages, different things going on in your personal life, child care, all those types of things, obviously there's a ton of variables that have to go into play when we're looking at taxes. Why is all this important? We are in the process of finishing our benchmarking right now. Any of you who have ever seen that in any of our webinars or any of the reports, we're just finishing up right now the reports for all of 2017, and I'm happy to report that CFI independent contractors did extremely well this year. So to give you an idea, we saw an increase in our average client at CFI, an increase in total miles of about 7,000 miles over the course of the year. And out of your benchmark group that we put CFI in, you're in the top third of companies in terms of mileage ran. In terms of total revenue generated, we saw a significant increase in revenue generated and put you in the top half of independent contractor businesses. And net income, which everybody knows is the most important at the end of the day, it's not how much you make, it's how much you keep out of all that you made. You're in the top about 20% of net income and saw a very significant increase in 2017 over 2016 in net income. So you all are doing a great job managing your business. If you go out to ATBS.com, you'll see a link that says to enroll in our newsletter. If you put your email address in there, we'll be sending notices out when we're doing webinars over the next month about all this benchmarking information, and we'll be sending all those reminders out and notifications, and you'll be able to come in and learn more about all those benchmarks and what it means to your business. So with that, again, I sincerely appreciate the opportunity to speak with all of you today.